What's up, and welcome to Complete Nonsense, where we take the latest news and trends and kind of show you the money side of it. We're your host. I'm Ben Richardson, coming to you from North Carolina. With me is my friend and colleague, Lindsay from Boston, Massachusetts. And with us today is a special guest, Jeff Ostrowski. Jeff is Bankrate's principal writer for home lending. Jeff, we are really excited to have you with us today.
Excited to be here.
Thanks, Jeff. We've got a lot to talk about today with the 2024 housing outlook, the impact of extreme weather on housing, and the newest retirement trend, retiring on a cruise ship. Before we dive in, be sure to like, share, follow, or subscribe from whatever platform you're joining us on. Jeff, let's talk about next year's housing outlook. The big question, is the housing market going to crash?
No crash is coming. There's a slowdown that's been happening. But home prices are still going up. And really, it's Econ 101. There's not enough supply to meet the demand. And so because of that imbalance between supply and demand, home prices are still going up. They might come down a little, but it's hard to really envision a housing crash just because there aren't enough homes out there. Builders aren't really building enough new homes to keep up with demand. And a lot of homeowners don't want to sell. They've locked in those 3% mortgage rates a couple of years ago. Now we're at 8% mortgage rates. And it's that calculus just doesn't make sense. If I'm sitting on my 3% mortgage, it's going to take a lot to prime me out of that and into the housing market when rates are at 8%.
Yeah, that's me 100%. I'm not doing it. But I have noticed, I know a lot of real estate agents have started talking about, some of the homes are staying on the market a little bit longer. So is that a good sign for buyers, or is that really is the seller's market shifting at all?
Yeah, I mean, it seems like this market has shifted a bit. So back in the pandemic, I mean, we were hearing these stories of 30 and 40 bids on a single property. It was just an extreme seller's market. And so it was a combination of super low mortgage rates. Everybody wanted to buy. And the home prices were going up double digits. So we're not in that situation anymore. It's not that crazy seller's market that we saw back in 2020 and 2021. But it still is a market that favors favors sellers and disfavors buyers. It's just not a great market to be buying just because there's not enough inventory out there. So as you mentioned, homes are sitting on the market a little bit longer. So that does give buyers some more flexibility. Maybe they can take a little more time to make a decision. Maybe they can still get an inspection of the home, or maybe not. I just talked to one person who closed this week who said she had to waive the home inspection to get the deal done.
But sellers at this point still don't need to fret right now. Definitely still in the seller's advantage at this point.
Yeah, exactly. Definite seller's market. There's the shortage of inventory. So if you've got a home to sell, you're going to be able to sell it. And then the question becomes, what do you do next? If you're, if it's a rental property, great, take your cash and do something else. But if you're looking for a place to live, it's not a great market.
Right. You mentioned that mortgage rates are 8%, probably even higher. Do you anticipate that rates are going to drop in 2024, or are the higher rates here to stay?
Well, it looks like we're stuck with these higher rates for a while. So in Bankrate's latest survey, the average 30-year fixed rate mortgage was 8.01%. So we haven't seen that since August of 2000. So it's been a very long time, and it's kind of a shock. I mean, you talk to baby boomers and they remember when mortgage rates hit 18% in 1981, and mortgage rates did in fact average in the double digits throughout the 80s. But since then, we just haven't regularly seen mortgage rates this high. So it's definitely a shock. And I don't think anyone anticipates that mortgage rates are going to fall significantly. I mean, they may go back down around 7%, even under 7% in 2024, but it's not going to be anything like the 3% rates we saw a few years ago.
Oh, that's a bummer. Those 3%, it's hard. I think that's a luxury that, over the last several years that so many became accustomed to, almost to the point where they might have, especially in the younger generation, might have assumed this might be the norm. And the reality is what we were experiencing at 3% was a very abnormal time, right?
Yeah, and I would rephrase your thinking about that. Yeah, it's a bummer that rates are up, but the reason that rates are so low is because we were facing global economic catastrophe. So
That's
it was
true.
the pandemic and lockdowns that really forced rates down to 3%. And so, I mean, it's kind of like bad news, bad economic news leads to lower mortgage rates. And
Right.
the reason that mortgage rates are so high now is because the economy's been doing so well. The job market keeps expanding. Unemployment's below 4%. The pandemic's in the rearview mirror. So, I mean, all that stuff is good, but then the side effect of that is that mortgage rates are much higher.
So one question I have is I know that for one of the more recent reports showed that first-time home buyers average age is now like 36 years old, which is the highest it's ever been. So going into 2024, like what advice do you have for first-time home buyers entering this super competitive market from high prices, high interest rate? What kind of advice do you have for them?
Yep. As you said, 36 is the median age of first-time buyers, higher it's ever been. And that's just because it's such a hard market for first-time buyers. I mean, the home prices are at record levels, so you're going to pay about $400,000 for the typical American home. Mortgage rates are at 8%. So that affordability calculation just doesn't work that well for a lot of
Yeah.
first-time buyers. So, but no matter what the market is doing, the advice for first-time buyers is pretty consistent. So one is make sure your credit score is as high as you can get it, because that's going to be the most important factor determining your rate and whether you're approved. So really work on that credit score. Save up for a down payment, save up for repairs. But one of the things that first-time buyers don't expect is just how much it costs to maintain a home, to repair a home. I know in my case, I'm constantly replacing appliances or calling out the plumber or an electrician. I mean,
Yeah.
that's going to be $1,000 a pop. So make sure you've got some cash. But by the same token, don't get too hung up on this idea of a 20% down payment. So yes,
Yeah.
20% is the ideal amount to put down for the best deal in terms
Yeah.
of the low fees, not paying private mortgage insurance. But don't let that be an obstacle. I mean, you can buy a house with 10% down, 5% down.
Yeah.
VA loans are available with nothing down. FHA loans are available with 3.5% down. So
Yeah.
if you're ready to buy and you can qualify and your credit score is good, I would say don't let the down payment be an impediment.
Yeah, I think that's an important point because I do think when you hear the 20%, like it's daunting for a lot of people because 20%, back in the day was still 20%. 20% on home prices today, it's like I, don't know where to begin. So I'm glad you called that out.
Yeah. I mean, just do the arithmetic. The median home price is just under 400,000 right now. So 20% of that's 80 grand. If you're paying off student loans, if your rent's been going up every
Yeah.
year, I mean, it's just tough to come up with $80,000. So
Yeah.
I would say that don't let that be an obstacle. I mean, if you can do it, great, but and definitely make as much of a down payment as you comfortably can. But I would say, if $80,000 is going to take you years to amass, I would say don't worry about that and get a loan with a lower down payment requirement.
Awesome.
Yeah, that's great.
Awesome.
That's great advice, Jeff. Speaking of down payments and housing, where are the hottest housing markets going to be heading into 2024?
Oh, now see, that's if I knew the answer to that, I wouldn't be talking to you. I'd be a rich real estate investor. But yeah, I mean, things keep shifting around. I can tell you what the hottest markets have been. So for early in the pandemic, it was the Mountain West, places like Idaho, Utah, and Nevada. And that was just because all those people sitting on a ton of home equity from California realized they could trade down to a more affordable market and work remotely. More recently, the really hot markets have been Florida and other places in the Southeast.
Yep.
So I don't know. I mean, the housing markets have a way of surprising us. And it's interesting. The most affordable markets are also sort of the least desirable markets, which makes sense. I mean,
Yeah.
they're affordable because there aren't a lot of buyers flooding in.
Right.
But every time we crunch these affordability numbers at Bankrate, we get places like Buffalo and Indianapolis and St. Louis and Detroit and Pittsburgh. I mean, those are really the affordable markets, and it makes sense that with the affordability squeeze, maybe Americans would start moving into those places, but it just hasn't happened yet. So I don't know. I wish I knew where the hot markets were going to be. I mean, it seems like Florida is still hot and is going to stay that way.
Which certainly plays in your favor, as a
well,
resident
yes
South
and no.
Florida, there's some benefit, right?
If I could sell my house in Florida, but then I just
Where do
look
you
at
go?
these, prices that my neighbors have been paying for houses, and it's like, man, this is twice as much as I thought this house was worth.
100%. Well, there's one thing you talked about earlier, and that had to do with like insurance. Like one of the additional factors that a lot of home buyers don't often think about is like what kind of impact. And I know one thing that really can also drive up insurance is extreme weather. And so I guess one of the questions is that I have for you is like, why should consumers even think about extreme weather risk when they're looking for a place to live? Like, why is that important?
Yeah, well, it's important because if you're in a high hazard area, you're going to spend a lot of money to insure your home against that hazard. So if you're buying a house with a mortgage, your mortgage company is going to require you to insure it. If you're in a flood zone, you're going to have to buy flood insurance. The cost of flood insurance has been going up for some people in high risk areas. In California with the wildfire risk, State Farm and some other major insurers have been pulling back there, and that's always a harbinger of higher insurance costs to come. And in places like Florida and elsewhere in Hurricane Alley, the windstorm insurance has gotten really expensive. So I mean, there are reports of houses that aren't mansions, just normal 2,000 square foot houses, not on the water. And the homeowners are getting hit with $20,000 and $30,000 premiums just for the windstorm insurance. That's not even counting burglary and fire. That's just for hurricane risk.
Well, I'm glad you brought that up, because one of the things I was going to mention, like when I was in the home buying process, I'm in a coastal area on the East Coast like you, and hurricanes are a factor. And in the home buying process, I was finding out that some of the insurance requirements actually cost more than the mortgage itself to cover, like if you're in a floodplain. And it blew my mind how significant of a factor it was in some of these places. So I'm glad you brought that up, because it's certainly something that everybody should take as a consideration, especially in high risk areas.
Yeah. And I mean, fortunately for most homeowners, the insurance costs aren't going to be that onerous. But it's definitely something to keep in mind. So, and you should have somewhat of a gauge on that. I mean, you'll know what the current property owner is paying for their hazard insurance, and so that's that can at least give you a guide. But the caveat is that in some cases these premiums have really been skyrocketing.
Yeah. You mentioned these premiums and these costs that sneak up on you, but how can homeowners best safeguard against these surprise home ownership, home insurance costs?
Well, so I guess, part of it is just having a cash cushion. At Bankrate, we really preach having, 6 months of living expenses and savings, so that you can absorb some of these things that come out of the blue. So I would say just make sure you have plenty of cash on hand so you can absorb these kind of costs without having to run up credit card debt. But in terms of hazard insurance, like with flood insurance, I mean, the nice thing about flood insurance is that if you don't need it, if you're not in a designated high risk flood zone, the flood insurance is actually pretty affordable. And then with windstorm insurance and wildfire risk, there are things you can do to harden your home to make it more resilient, and the insurers will reward you by lowering your premium. And a lot of states are even subsidizing homeowners to some extent. So like in Florida, for instance, homeowners can get up to $10,000 for things like replacing their roofs or putting in impact resistant windows.
Oh, wow.
So I would say just to explore those kind of things. I mean, it's just one more homework project you have to do as a homeowner, in addition to making sense of a volatile housing market, a volatile mortgage market. But it's just kind of the cost of doing business. It's one more thing that goes along with homeownership. You got to figure out how to mitigate weather risks.
Well, truthfully speaking, I mean, I'm gonna be honest, I don't like thinking about insurance that often, if I'm being completely real here. But like, tell us, what are some of the key things that we should be checking with like on our policies each year? Like, what are some of those things that you recommend every homeowner do year over year in checking their insurance policies?
And I'm a little shocked to hear you're not doing actuarial calculations and looking at insurers' regulatory filings.
It is surprising.
Yeah, but one thing that homeowners should do is to make sure that your insured value reflects the value of the home. So a lot of property values have just really skyrocketed over the past few years. And if you find yourself in a situation where you have significant weather damage and you're underinsured, that can really throw a wrench in your insurance claim. It gets complicated and convoluted, but insurers will cite something called underinsurance as a reason not to pay or to delay payment. So just check in with your insurance agent, your insurance company, and make sure that you've got enough coverage. And then the other thing is around flood insurance. So I mentioned that if you don't need flood insurance, if you're not required to have it, it's actually pretty affordable. Yeah. The other part of that is that flood insurance is the only type of coverage that covers floods. And so every time there's a hurricane, we get all these stories of homeowners not getting paid out through their regular homeowners insurance or their windstorm insurance because the damage was caused by a flood. And if you don't have flood insurance, then you're out of luck. So yeah. I would just take a hard look at where you are and what your tolerance level is for flood risk, and really consider buying a flood policy through the National Flood Insurance Program.
Yeah, that's super interesting. Lindsay, I feel like you didn't you have an issue with some flooding at some point?
I did. This summer, I think, was one of the worst rain summers. I saw something that it rained every single Saturday for 20 weeks in a row or something like that, which is crazy. But I live in Boston and we don't really live by the water. We have a small beach by us, but one of the nights it rained and I came downstairs to find that our whole bedroom was flooded with water and we didn't have flood insurance, and we had to end up paying over like $8,000 or something just to put in the proper drainage because we had all this water coming in.
So in hindsight, maybe having flood insurance, even though maybe you weren't in a floodplain, paying a couple dollars a month might have been worth the investment.
Now we have it. So next time this happens, I'll be better protected. Yeah.
Well, I'm sorry you had to learn that way, but definitely a good reason. Yeah. So another thing, I just had one question for you, Jeff, in terms of how often should consumers be shopping insurance to compare rates and things? Is that like a once a year thing? Is it every other year, twice a year? Like what would be your recommendation?
Oh, it really depends. And insurance is a difficult thing to shop for, and it's really there are a lot of quirks. I mean, it's a state by state system, so the insurance market in Kansas and Nebraska is way different from the insurance market in California and Texas. So if you're in a place like Iowa, which routinely has some of the lowest insurance premiums in the country, it's kind of like, why even bother if your insurance premium is $800 a year, then, just stick with State Farm or Allstate or whoever your carrier is. And then on the flip side, in the states with really expensive insurance markets, part of the reason they're so expensive is that there are very few choices. The major insurers have pulled out. So like in Florida, for instance, part of the reason that windstorm insurance is shooting up so much is that there just aren't many choices. Yeah. And so it's really hard
supply and demand
shop around. Yes, homeowners should be shopping around. So if you're facing one of these situations where your hazard insurance is shooting up, definitely contact an insurance agent, call around and see if you can get a better deal. But the caveat would be there just might not be better deals to be had.
Yeah. Well, I know there was another thing that we talked about, with all the home risk and things like that. There's something else I read about recently, and I think it was something along the lines of retirees escaping to a cruise ship for retirement, like as opposed to like a standard retirement home. Lindsay, I think you brought it to my attention. I don't know if you can spill the beans a little bit more about this. I was so fascinated to hear about it, though.
I saw this on TikTok and I thought it was so interesting. I found myself going down the rabbit hole of this couple. It's an Australian couple who booked 51 back-to-back cruises on Princess Cruises. And they said that it was cheaper to retire on the cruise instead of downsizing and going to a home. And then another couple also did the same thing. And they said that their initial down payment on the cruise was just $60,000. I'm saying just because, Jeff, you mentioned that the down payment right now on a home could be upwards of $80,000, but they are paying an extra $130,000 in maintenance fees. So
Yeah.
I would love to know if either of you would ever retire on a cruise ship.
I could tell you my answer is no. I'm too claustrophobic. Like, you put me in one of those small rooms, like I have panic attacks every day. So it's not for me, certainly. But Jeff, I don't know. I do enjoy travel, but the cruise ship probably isn't where I'd want to spend it.
Yeah, well, so I would push back a little bit against this notion that it's somehow more affordable to retire to a cruise ship. So,
Yeah.
the down payment on a house, if it's 60 or 80 or $100,000, you're putting the money into what's an appreciating asset, or over time has been an appreciating asset. You can be pretty sure that you're going to be able to get that money back when you sell the house. The $60,000 that they put down on cruises is gone. I mean, once the cruise is over, that money's gone. And after a year of cruises, they're sort of back to the place that they were at the beginning, which is they need a place to live. So,
but you know what, Jeff, you have experiences. those memories will last forever.
yeah, maybe. I don't know. After I would think after 52 cruises, you probably wouldn't remember one from another. But
that's a valid concern.
And I agree with you, Ben. I don't know about living for a year in basically the size of a living space that's the size of a jail cell. I mean, obviously you're living to eat, or you're leaving to eat your meals and to go hang out on deck.
Yeah.
So
but maybe a short-term trend, definitely an anomaly, I would say.
Yeah,
I agree.
So with all of that, but with retirement homes and retirement communities, what has the impact of the housing market been for retirees looking to retirement communities? What's the impact you've seen there?
Yeah, I mean, it seems like home prices are rising across the board, and that includes for over 55 communities. So I don't have any good data, but I mean, just anecdotally, some of the places that used to be very affordable over 55 destinations have seen prices really shoot up over the past few years, along with everything else in the housing market. So it's
definitely considerations as you're looking at like retirees with fixed incomes, like definitely looking how you approach it might be a little bit different with the market getting more and more competitive.
Yeah. Although I'd push back against that phrase fixed income as well. I mean, Social Security has been going up every year.
Well, that's a good point.
It's
good point. I think we just saw another recent bump recently, over 3%, right?
Yeah. So I mean, not that you're most retirees are living high off Social Security, but
right.
But yeah, it is a tough market, and you really have to think about how much money you have and how long it's going to last, and where you really want to live. I mean, if you want to go to one of those hot destinations, it's going to cost you
100%.
Yeah. For those that are looking to retire, where are the most affordable places to go right now?
Yeah, I mean, I would go back to that our earlier discussion about the places where people don't necessarily want to retire, or don't necessarily think about as retirement destinations. I mean, those are the most affordable places. So it's the Midwest, the Rust Belt. In all of our surveys and research at Bankrate, it's always places like Pittsburgh and Buffalo and St. Louis and Indianapolis and Detroit and Cleveland are coming out as the most affordable housing markets. But I guess that choosing a place to live is not about affordability. I mean, if it were, we all would have flooded into those affordable markets by now, and they wouldn't be affordable anymore. But there are all kinds of things, choices about weather, about family. Where are your family and friends? Do you want to move away from your doctors or your church or whatever else it is at your home that makes it home? So. Yeah, I don't know. I mean, it's been intriguing to see people sort of resume moving around the country in the past few years. And it's some people love their new homes, and others are saying, why did I move? This isn't quite what I expected.
Yeah, I think either it's really the case, or I think the St. Louis's and the Iowas and the locations like that are really hidden gems, and they've done a great job of keeping it a secret. That could be the alternative that we're seeing here, but great point.
Yeah, and I know that in our best states to retire study, we ranked Iowa as the best state to retire. Do you think we'll see an influx of people moving there, Jeff? Or
yeah, that would be amazing. Yeah, if we could just tell people to pick up their lives and move somewhere, and they would do it.
Yeah, it'd be easy.
Yeah, it's I mean, I think it goes back to what I described. It's it's pretty straightforward to pull out these data points around housing costs, cost of living, and pinpoint a most affordable area. But the choice about where to live, where to retire is so much more complicated. So much more goes into it than just a sheer cost calculation.
Yeah, I completely agree. And I think at the end of the day, people are going to live where they want to live. And, I think economics are certainly going to play a factor, but there's so many other strong considerations as well. But Jeff, I want to thank you personally just for coming on and joining us again today. Like, you're such a great person to chat with. So insightful on things that we really have no clue about. So thank you for informing us. It was great. Lindsay, I didn't know if you wanted to take a minute to let our viewers know what we've got coming up next week.
Yep. Next week, we'll be touching on some of the most talked about trends in the workplace and beyond with remote work and salary transparency. And we'll also have a special guest joining us. This is one you don't want to miss.
Yeah, I think salary transparency, it's been such a taboo thing for so long. So I think it's going to be an interesting topic. Jeff, thank you again for joining us. It was great having you. Lindsay, thank you again. And thank you again to our viewers. Be sure to like, subscribe, and share on whatever platforms you're watching on. And we will see you next week.
All right. Thanks. Enjoyed it.
Thanks.
You guys.